Hey, welcome back to YT Finance, and today we are talking about Tesla, Ford, and Apple stock. We will begin by talking about how Tesla can lose its electric vehicle dominance in the industry, and we will talk about how Apple stock is a great buy right now when we consider three key factors. After that, we will talk about Ford's electric vehicle strategy to gain even more market share, followed by data which suggest that Ford resuming their dividends has increased its share price and will draw investors back to the stock. Go and press the like button on this video right now for more stock market news updates. Comment your thoughts down below on either Apple, Tesla, or Ford. Remember to subscribe and turn on all subscription notifications to stay informed about what the stock market is doing. And now let's get right into today's stories. A Guggenheim analyst recently spoke out about how Tesla is losing their market share, and he says this, and I quote, "Our balanced view on Tesla is based on number one, a favorable near-term setup. With demand outpacing supply, we see visibility to volume upside in 2022 and 2023 as new factories in Austin and Berlin ramp. Number two, competitive advantage over all original equipment manufacturers today, including a high degree of vertical integration, a software-defined vehicle approach, a dedicated charging network, and greater battery capacity. Number three, increasing competition from both legacy players and new EV-only entrants," end quote. This same analyst initiated coverage on Tesla's TSLA stock, and he gave it a neutral rating with a $925 price target. The current Tesla stock price is down around 20%, which is why it trades at $902. One reason for this 20% pullback is that the CEO, who is Elon Musk, sold large chunks of his stock, which were worth around $12 billion, to satisfy taxes. The analyst also thinks that it's apparent that Tesla is losing their market share because GM, who owns Chevrolet, saw its electric vehicle registrations rise to 9.6% from 8.3% from a year earlier. Data also shows that other car manufacturers like Nissan, Ford, and Audi have already stolen EV market share. However, the analyst goes on to say that the EV market is growing because he says this, and I quote, "We expect electric vehicles to reach 14% of global sales by 2025 and 36% by 2030, representing an approximate 30% compound annual growth rate over the next decade. EV adoption will be driven primarily by tightening global emissions regulations and increased commitment by legacy automakers to electrification. We also see improving cost of ownership and vehicle performance/safety benefits as key drivers of growing penetration of EVs globally," end quote. Now, this analyst also has a second price target for the TSLA stock, coming in at $1,963, and the reason for this price increase is because he says, and I quote, "Further traction with robo-taxi efforts, delivering on extraordinary battery cost improvement targets, and potential for a high-volume Model 2 in the $25,000 price range," end quote. So the analyst also gives ample opportunity and data to be very bullish on Tesla and their TSLA stock. But now let's talk about some Apple stock news. The AAPL stock has dipped around 7% since its peak at $180, and the NASDAQ index has also declined around 4% in the same time period. So does this mean it's a good time to buy the NASDAQ QQQ or the AAPL stock, or should we wait because it could potentially fall down even further? Well, it depends. The AAPL stock is not a cheap stock right now because of its price to earnings ratio is so high. It's actually higher than it's been for almost more than a decade. But with that being said, because the stock price has declined recently, it has actually helped out their ratios. We also have to remember that Apple as a company has extremely good business fundamentals, so this is a compelling case to buy the stock at its current price. The returns that the AAPL stock has brought investors are absolutely amazing because historically, the average one-year gain of this stock is around 22%. These gains would even be further magnified if we bought during a pullback, and because the stock has pulled back around 7%, that would just add to our overall gains. As you know, the best time to buy a stock is while it's pulling back, so when it rebounds and has the recovery, your gains are going to be amplified and multiplied by a substantial margin. However, this strategy would not work very well on every stock because clearly not every stock bounces back, but because we are talking about Apple, it's going to eventually head higher later on due to their strong business fundamentals, and if you are a patient investor, you can almost guarantee that you're going to make up for any losses in the short term. Now, if you can't make your money back in the short term because of the stock stock's volatility, in the long term, as long as you're just patient and you hold the stock through, the stock is eventually going to grow past the point of which you bought it at. The current stock price has been hovering between the ranges of $168 and $172 per share. However, what is the ideal price that you would buy Apple stock for? Now, I personally would want to get it as cheap as possible, which is why I put below $150, but I want you to comment if you're willing to buy this for over $172, between the ranges of $150 to $165, or like me, you want to get it as cheap as possible below $150. So I will be looking forward to responding to your comments down below. But now let's talk about Ford stock. And if you didn't already know, Ford resumed paying their quarterly dividend back in October, so investors in Ford stock can expect to get another dividend announcement in late January of 2022. By Ford resuming their dividends, this has showed that management really cares about their shareholders, and it also has invigorated shareholders' trust and faith within the company itself. The only problem I see now is that the dividend is lower than what it used to be, because now they're only giving out around 10 cents per quarter when it used to be 15 cents. Currently, the company projects that its full year 2021 free cash flows will be between $4 billion and $5 billion. The company currently has around 4.036 billion diluted shares outstanding, so its quarterly dividend will cost them about $403.6 million. But because this is a quarterly dividend, we have to multiply that by 4, which would equate to $1.614 billion on an annual basis that Ford is giving out just in dividends. The company can clearly afford this dividend though, because $1.6 billion is nothing compared to the $4.5 billion that they're anticipated to bring in free cash flows. In a letter to shareholders, Ford's chief financial officer also said that the company plans on spending between $40 to $45 billion in strategic capital expenditures, and most of the spending will occur between 2023 to 2025, so in the meantime, Ford is anticipating to ramp up their free cash flows. Ford's management was very smart to resume their dividends because the stock price was trading at around $15.51, and then when they unleashed their dividend yet again, the stock price surged all the way up to $21.45. Investors are also very eager to see where the stock price goes after the dividend goes back to $15 per share per quarter. So let's start to look at some projections, forecasts, and price targets for F stock to see where it really could go. If Ford increases their dividend by around 15% at the end of January in 2022, which would equate to 46 cents annually, we can project that the stock price, which is $20.35 per share right now, could go all the way up to $23 per share. So if you are already an investor into Ford, you can expect to see a rise or increase anywhere from 13% to 20% growth over the next year or so. These gains could come in handy, especially if you are reinvesting your dividends back into the company. I also want to point out that Ford has a large investment in Rivian Automotive, ticker symbol RIVN, who is an EV manufacturer that went public back in November. Ford owns around 10% of Rivian, and this means when Rivian experiences good news, this could also help the Ford stock itself rally. Last week, Rivian announced a $5 billion electric vehicle factory that they're building in Atlanta, Georgia, which, when it's up and running and fully operational, could produce around 400,000 vehicles per year. So I would say that's fantastic news. Ford is also collaborating with global foundries, and this collaboration is used to advance semiconductor manufacturing and technology development within the United States, aiming to boost chip supplies for Ford and the US automotive industry. Now, while these are two very bullish developments for Ford, let's not get too hasty or ahead of ourselves, because in the short run, there is a chance that the Ford stock could decline towards around $18.50 per share. However, with all of these great news developments and their dividend, it may be unlikely that the Ford stock would drop below $18 per share. However, this is still a possibility, and I want you to be aware of it, especially if you are a stock trader, which could trade off of this volatility if you identify this trend soon enough. Ford's management also recently gave a full update for their adjusted earnings guidance for the entire year, which falls between $10.5 billion to $11.5 billion, which is up from their previous projection of between $9 billion and $10 $10 billion, so this is also very good news. Out of 22 analysts that were polled, they say that the F stock is a buy, and it has a median price target of around $20, which is exactly what we estimated. The low-end price target by analysts is $12, and the high-end price target is $25. Now, I personally am neutral toward Ford stock. I don't hate it, but I also don't buy it. And this is mainly due to opportunity cost, because there are other automotive stocks that I just so happen to like better than Ford. Also, if you don't want to expose yourself to Ford directly, especially if it pulls back below $18 like we talked about, you can always invest into Ford stock through an ETF. This lowers your risk of losing money. It's really good risk management to own a couple of ETFs, and it's also very good for long-term investors. Out of the 4 ETFs shown on screen, I personally tend to like IDRV and RPV as my top 2 ETFs, and then COWZ. However, ticker symbol FTXR has the largest exposure to Ford of around 8%. But what do you think? Comment your thoughts down below. Remember to like this video if you haven't already, subscribe if you are new, and I will see you in the next YT video.